Tape reading is one of the most important things you can do to becoming a consistently profitable day trader. In this video, we're going to go through some price action and I'm going to analyze what's happening and possibly even enter into some trades in backtest mode. The whole point of this is to understand what happened in the past, try to internalize it so that way we can apply the same concepts into live trading. Imagine this is a practice session before the actual game. If you're new here, my name's VJ. I'm on the path to becoming a consistently profitable day trader. I'm sharing my experiences, my thought patterns, my wins and losses, so that way you can become a better trader. If you want to follow me on this journey, hit the like button, hit subscribe, and let's jump into the charts. So we're looking at market replay from Monday, August 14th, and the whole point is to understand what happened historically with the price so we can copy and paste it into the future. So 8:30, there was news. Here's a rule for me. Anytime we're in a consolidation between a high and a low, especially on a smaller time frame, we do nothing. This is where I've lost so much money, and so we're gonna tape read this quickly, but we're not going to even look for trading opportunities until one of these gets broken. There we go. So it got broken. I want to see if there is any type of displacement. There isn't. I mean, price did go up, but we're still back into this range, so we don't do anything yet. There we go. Notice how it got broken again, but we're still in this range. Imagine trading through this. This is where you get chopped up and basically lose all your money, because that's what's happened to me. So none of this you want to trade. You also want to notice the time. We started this at 8:30 and now it is almost 10:30. That's almost 2 hours, an hour and a half of just chopping around, and that's something that we as traders need to be comfortable with. And the only way we could see that is actually backtesting this, kind of doing market replay. We don't have to sit through 2 hours, but we could see what to expect. Now that we broke out of the range, I want to see where the next round liquidity is. I see some relative equal highs up here and up here. We could see price went up, went down, went up, it came into this order block. So this would actually be a potential long entry, and we could put a stop right underneath here. And then I want to target these highs right here, and assuming we get filled right on this order block. So we wouldn't know that this is an order block until this green candle comes up. And now that the green candle came up and it closed right up here, this is exactly when we would enter into this trade right here. We put a stop here, and we don't want price to close below the main threshold of this wick. We got tagged in, and then basically we'd win at a profit, which is good. Of course, this is all 100% hindsight, and that's the whole point of this, is it's practice, right? You're understanding, you're watching to see where price wants to go. You want to look at patterns that tend to repeat themselves. So when you're actually in live market conditions, you can figure out what to expect. So right here, notice how price came, wicked through here. It almost hit this order block. Both consecutive up close candles are order blocks, but it did come into this wick and this gap. So we could have gotten long here underneath this liquidity. If you notice, price swept liquidity and then it created displacement. So this is a bullish move, as in price wants to go higher. Ideally, we'd be using this with a higher time frame bias, but for simplicity, we're only looking at the 1 minute. So the fact that price took out liquidity, came here, broke structure, there's a potential long entry we could look for here in this fair value gap. I want to see if there is any type of longs we could enter here, and I'd put a stop right here and I would target this area right there, the mean threshold of this wick. Let's see if we even get filled. Good. And that just shows that sometimes we don't get filled, and that is okay. That's the whole point of this tape reading. Let's see what happens. Some consolidation for a bit. So notice prices went up. Let's see what happened here. We can back up. Price actually took out this liquidity, the swing high right here. Price came, wicked through it, and then it started rejecting. So that is a good bearish sign. Let's see what we can do for short models. There's no break of structure here. Maybe on the lower time frames there is, but this is already the 1 minute, so I don't want to go too much lower than that. It's dropping lower. Price just continues going lower and lower. There is a swing high here. I want to see if price can take that out. Okay, right here. Price takes out the swing high, and so that means we are in a buy program. And if I were actually trading this, I wouldn't want to target this because I don't know, but there is a low-hanging fruit objective right here, this bearish order block. I would want to enter long on this bullish order block, put a stop right here and target here. Price comes down and then we get filled. Perfect. And then we take that profit. So that would be, again, market's not moving much, but risking 2.25 handles for 3.25. So 1.4R trade, which is pretty decent. Again, the whole point of this is to see what has happened historically. It's like practice, so we can do this in real market conditions. So let's see what happens next. So price came here, stopped right at the mean threshold, and notice how it rejected. Even the wick came right to the CE of this wick right here. It came down into this order block. I don't know, maybe this could be a long too. Let's just say it is. Just for practice purposes, I put a stop underneath here, and then I target this high right here. Perfect. And the only reason why I felt comfortable with this, again, back testing, is price came and stopped right at the mean threshold of this order block. And so the fact that it closed at mean threshold meant that it still had potential bullish price action. And price came right up there, which was great. And that was a 1.7R trade. So now price is in this fair value gap, actually came down into this fair value gap. So I actually have no idea what's going to happen. And then, yeah, came down here and took out this right up here. So this is the lunch macro. Usually ICT says that during lunch macro, stops get taken out. So I see a bunch of sell side liquidity here. I want to read this price and see what happens. Price sweeps liquidity, comes down. It doesn't break structure yet, but it does here, which would indicate we're in a sell program. Price comes into this area, breaks structure, and then price starts going down. So let's see where it stops. Price came right to the mean threshold of this order block and started rejecting away. Let's see, maybe there is a short right here. I don't know if this is even a good possibility of a short, but you put a stop right up there and I target these lows. Yeah, we get tagged in right there and there we go. That's a 3.4R trade. And prices continues going lower and it does ultimately target this liquidity. But notice what happened here. Prices goes up, down, it stops right at this order block. One tick above, so just enough for you to enter. We put a tight stop and then we target these lows just because I don't know what's price gonna do, and that's just a low-hanging objective for me. And we could have put a target here, here, or here, but that's not guaranteed to get hit. So with my model, this is what I would have done. Okay, well, let's continue. So price took out liquidity. It did not break the structure right here, and we're still in the sell program. Price came right into the CE of this wick and started going lower. Takes us out, goes up here into this fair value gap, and price stops right here at the mean threshold. There is relative equal highs here, so I wouldn't necessarily enter short here, but price did come into this order block, so I don't know what's going to happen. Good, we brought our handy dandy range lines back, so when we're in a range like this, we do not trade. This is how I get hurt every time. We broke out of it, which is good. Price takes this out, which means we are potentially bullish, but I don't know what's going to happen here. Just hitting next because I don't really know what's going on here, but price did come into this order block, so this could have been a place we could enter short on, stop right there, and then we could target these lows, but this isn't something I would have done because there's no break in structure, or maybe this swing low is the break in structure. So price came down, took this out, turned into a sell program. Could have entered short right here on this order block. We would have gotten filled by one tick and then we would target these lows. And then price is right here at this order block. I don't know if this is a good entry. I probably wouldn't just because there is some liquidity down here. So in times like this, I would not be trading. I'd purely just be watching the tape, but there's nothing here that screams it's a good model to trade. We are back in this range. I'm seeing if there's anything here that we could trade. This is a swing high for me. It needs to break above that before I can enter in long. So now this is a swing high because this is a new low. Okay, looks like it took out some liquidity or created a large wick. Still nothing to enter on. Okay, so prices continues going lower. So this is a swing high for me. So breaks above. This might be still a better one, but this is a very aggressive entry. If we are doing this, let's see if, again, I probably wouldn't trust this one, but let's say we did this. I'd stop. We'd target this. Let's see what happens. Okay, we'd get in. And we're still going. Okay, we would have profited, but this was actually just a really bad trade. Why? Because we're in this consolidation. We're back in the range. This is something that you want to avoid. It's going to drive you crazy, or at least for me. I'll speak from my experience. When I am in this trade, and if I'm watching it, I'm just like, wow, this is the worst thing, because price goes up, down, and it's just first a really bad entry, and you don't want to be trading in these chops. And so not something I would do, but it's cool to see price did deliver. You see price came into the CE of this wick. It does chop around, so you don't really want to do anything, but this is what ICT calls time distortion, so maybe it is permissible. And then after this chop, it does come out here. Price comes down into this order block, starts going higher. Let's see where it wants to go, and it does continue, and it takes us out. All right, yeah, you're probably thinking, Vijay, that's great, that's all hindsight, and that is the entire point of this. We're not going to get better by only doing live trading, right? Market isn't open all the time, especially on the weekends. If we want to get ahead, we go back through the charts, especially on a Saturday or Sunday or Labor Day, since that's what's happening right now, and we go through the price action and pretend it's real market data. That's the only way we get better. It's like you're able to condense an entire day's price action within just 20 or 30 minutes and actually try to understand how each tick is happening. Why is price moving the way it is? And that's why we're doing this. If you guys enjoy this video, I think you're going to love this video.